Hi students, we are now ready to talk about Chapter 3. So Chapter 3 is all about FICA taxes, the Federal Insurance Contribution Act. So we are going to be dealing with looking at taxable wages and knowing what to calculate for the two FICA taxes. So under FICA, you have two taxes that are going to be calculated for employees. You have your Social Security and your Medicare. So in the book, it's going to refer to your Social Security tax, your FICA Social Security, as the Old Age and Survivors Disability Insurance, or OASDI for short. And then for Medicare, you have HI, HI. So when it refers to those, that's what it means. Our book is following the 2018 tax laws. So right now, as you can probably see on my screen, employees and employers are both paying the OASDI tax. They're paying 6.2% on taxable income on income up to $128,400. Once an employee makes more than that, they will no longer pay that 6.2% tax. On the high, the Medicare side, they are paying 1.45%. There is no income limit, and there is no maximum amount that they have to pay. In fact, if they earn over $200,000 in wages, then they pay an additional 0.9% of Medicare or high tax. This applies to both employees and self-employed individuals. As you can also see on the screen when it's talking about those tax rates, self-employed individuals, as you can see, since they don't have employers contributing those taxes for them, pay double. So if you're self-employed or a person is self-employed, they have to pay 12.4% in OASDI and 2.9% in HI. The limits are similar as far as wages go. So in Chapter 3, we're just going to kind of cover how to calculate withholdings for FICA taxes in different scenarios. So this first one's just a pretty standard situation. We have employees of Right Shop, and they are paid biweekly, and they just give us their employee name, their biweekly taxable wages, so they give us what amount is taxable, and they just want us to calculate the FICA withholdings. Now, for me personally, I found it easier to type these wages into Excel and use calculations to come up with the answers. But really all you're doing here for each employee is multiplying their taxable wages for OSADI by 6.2%, and for the high, the 1.45%. You do want to round to 2 decimals, okay, or to the nearest cent. So the only reason I wanted to go over this one is when we get to the employer's contributions, there's a rounding situation, not really issue, because it's correct. So as I go through and calculate these again for Manny Castro, I would take 1,000 times 6.2% to get the OASDI, and then 1,000 times 1.45% to get the high contribution for him. And again, I'm just going to fill these in rather quickly because it's just computations here. So these are all pretty straightforward, it's just the multiplying really. And so I had already calculated these, so I can easily and quickly add them in. Okay, so there I've calculated all of the employees that we have listed, all of their FICA tax contributions. When I'm finished, I just need to do the total rows here. So I add up their total biweekly taxable wages, so the total wages we're paying to all employees, $7,385.20. Okay. And then I add up their total contributions. So OASDI, total FICA withholdings for all employees added up to $457.89. and Medicare was $107.09. So I would be inclined to just take those numbers and put them down here where we're talking about the employer's contributions, because we know that they pay 6.2% and 1.45% just as the employees contribute. However, that actually does work on the Medicare calculation, but on your OASDI, if you put in 457.89, it will flag it as incorrect. And the reason for this is we're rounding to 2 decimals when we calculate each employee. So there may be a couple of situations where we rounded up or down, and it could throw off our total. So when you're calculating the employer's contribution, you always want to go off of the total taxable wages. So I'm just going to plug those amounts in here. So the total taxable wages is $7,385.2. Just to show you, if I pull up the calculator, 7,385.2 times 6.2%, we would get $457.88. So notice that's 1 penny lower. Again, it's just due to rounding of these, but this is the correct amount here because we're going off of the total taxable wages, okay? And I would do the same for the Medicare tax. And notice there I actually get the same amount. So if you're off, a penny or two, that's why you definitely need to go off of the total taxable wages when calculating employers' tax liabilities. So that's why I wanted to go over that one really quickly. The rest of it's pretty smooth and easy, but I thought that might trip a few students up. So that was, just as a reference, that was PR 3-1A. So you should have one similar on the homework that just has different numbers. You should have, I believe, similar homework on all of these. So hopefully it'll help you kind of go through. So this next one was just an example of looking at the limits, the wage limits on FICA tax withholdings, just so everyone was kind of clear on how all of that was calculated. So on this one, we are looking at one employee only, and we are looking at, as she earns pay throughout the year, what happens when she reaches the wage limit, the $128,400. Okay. So on this one, it says during 2019, Rachel Parkins was paid a semi-monthly salary of $8,000. So we want to compute the amount of FICA taxes that should be withheld from her. They want us to look at it on her 9th paycheck, her 17th, her 24th, and on Part D, if she's paid a bonus of $100,000, how much additional Medicare tax she would have. So the 9th paycheck is pretty easy. What I always look at is we want to make sure she hasn't reached the wage limit for withholdings under OASDI. So her 9th paycheck will put her as a gross pay to date of 9 times 8,000 or $72,000. So at that point, she's not near the limit. So her taxes are just going to be the 6.2% of 8,000 for OASDI and 1.45% for high. Okay. So I calculated those as $496 of Social Security and $116 for Medicare. When she gets to her 17th paycheck, at that point, if I calculated her gross pay including that 17th paycheck, 8 times 17, I would get a gross pay of $136,000. Well, I know I can only tax her on wages of $128,400. So what I always do is I look at what was her gross pay before this 17th paycheck. Okay, so if she gets paid $8,000, how much had she earned before we cut that 17th check? Well, 8,000 times 16 gives us her gross pay before this paycheck. So up until this point, she has had and paid taxes on $128,000. What that tells me is, as far as just her OASDI, we can only tax her on a remaining $400, right? Because the limit is $128,400. So I take $128,400 minus what she's paid to date of $128,000, and she's going to pay OASDI taxes on $400. So 400 times 6.2%, I get $24.80. Okay. As far as our Medicare taxes go, they're still the same. There's no wage limit. Okay. Well, now she has paid taxes, as many taxes as she's going to pay for Social Security. So when we get to the 24th paycheck, there will be no additional OASDI. There wasn't from paycheck 18 on. Again, on her Medicare at this point, it would still be the $116. And I would want to watch that because she's getting close to that $200,000 where we would charge an additional 0.9% of high tax. So again, if we take 24 paychecks times 8,000, she's actually at 192,000. So she's still under that limit. So her high is 116. But then we go to Part D. So if Rachel Parkin's year-to-date earnings as of her 24th paycheck were 192,000, which we just saw, her year-end bonus is 100,000. How much is the additional 0.9% high tax withheld? Well, here I would want to figure out what her wages over 200,000 are. So she has 192,000 plus the 100,000 bonus. So all total, she's earned $292,000. So we need to tax her 0.9% extra on any wages over 200,000. So I'm going to subtract out 200,000, and we need to charge her an additional 0.9% on just that 92,000. So 92,000 times 0.009. Her additional Medicare or high tax would be $828. Okay. So hopefully that one makes sense. It really is dealing with the wage limits as far as taxing goes and taxable income. So you just have to be mindful under 2018 tax law that the wage limit or the tax amount that we pay is only up to $128,400 of taxable income on OASDI. Medicare pays 1.45% on all income, and then anything over 200,000 earned will get an additional 0.9%. Well, we can check that one and move on to a different example. Okay. So this one I wanted to cover because it deals with a tipped employee. Okay. So as we know from Chapter 2, tips are taxable wages. So it is important that any employee that's receiving more than $20 in monthly taxes must report those taxes as taxable income. So that is on the employer, or I'm sorry, that's the responsibility of the employee to report those tips to their employer. And then both the employee and the employer need to pay taxes on those tips. We are going to look at a situation here where we have a part-time waiter. So again, as long as this tipped employee makes more than $20 in tips a month, those wages are taxable. Okay. So we have Ernie Gilmore began working as a part-time waiter on June 1st at Sport House Restaurant. He received $390 of cash tips, and they were reported in June. So those were reported to his employer. And then he was paid during July, he was paid wages of $525 by the restaurant. So again, that was whatever rate that they were paying him, which we know standard tip employees get $2.13 per hour since they get that tipped credit. But so here we're looking at, well, what are his total taxable wages? That's always important when we're calculating FICA. And so here, his taxable wages are going to be the $390 of tips reported, along with the $525 paid by the employer. So all total taxable wages are $915 for this individual. Ernie himself and the employer are both going to pay 6.2% for Social Security and 1.45% for Medicare. So once you understand that, you know, the tips are taxable income, you just add it together to get his total taxable income. So we would take 915 times 6.2%. That would be $56.73, both on taxes withheld from his employee paycheck and the amount that the employer is going to pay. And then same with the Medicare, we would take 915 times 1.45%. Rounded, it should be $13.27. Okay. So even though it was cash tips, those do have to be reported. Now we can't verify the employee is reporting the total tips that were received, but that's on the employee to be honest about the tips received, and they are responsible for tax. So the employer must withhold tax from their paycheck and pay the match as well. Okay. So that one's pretty easy. It's just understanding taxable income for tipped employees. Okay. I was just seeing which number we were on. We have 2 left. So this one, again, is just another example of working with taxable income, and then we're still calculating withholdings. So the difference here is just kind of understanding what pay is actually considered taxable income. And some of this was, again, in Chapter 2. So it's important to know how to calculate taxable income and what's taxable under FICA taxes. So in this instance, we have Ken as a maitre d'. On February 1st, his gross pay was $800, 3 days of working, 1 paid vacation day, and 1 paid sick day. And he also reported to his employer tips of $900 for the previous month. So those taxes will come out of this month's pay. Gorman belongs to the company's 401k plan and has a 5% of his gross pay deducted each week. Okay. They also, Carmel Dining, oh, I can't say that right, Carmel Dinner Club also provides a matching contribution of $40, which is the same as the 5% he's contributing into the plan for Gorman. So it just wants the deduction for OASDI tax and for the high tax. But again, really what you're calculating here, which is more important, is his taxable income. Okay, so when we're looking at taxable income, we know that the gross pay of $800 is taxable. And the only question that might come up is, well, is sick pay and vacation days? Yes, those are taxable income. So the only time that sick pay becomes non-taxable or tax deductible is when the employee has been out for over 6 months. So the first 6 months of all sick pay is taxable. And then once an employee, if they still had that much sick leave, which wouldn't that be nice? If they are gone for more than 6 months, then, you know, starting in that 7th month, that income from paid sick leave becomes non-taxable. So that's just kind of an important concept to understand. But his total gross pay of $800 is taxable, as well as the tips that he's reported. We learned that from the last example. So really the only question then is, well, what about this contribution he's making? You know, is it tax deductible or, you know, is it tax deferred? What's the situation here? And what about the matching contribution? So when it comes to actual defined benefit plans or deferred benefit plans, 401k, 403b type plans, retirement plans, how that works is any contributions made by the employer, so in this case Carmel Dining Club or Dinner Club, the matching contribution is not taxable. So that $40 that they're providing into the 401k for on his behalf is not taxable income, so we would not add it in. However, the contribution he's making of his gross pay, the 5% of his gross pay, is taxable. So we will count his full $800 as taxable income. But the employer's contribution, the matching contribution, is not calculated. Okay, so then when we're calculating his taxable income, we would take the full gross pay of $800 plus the tips reported of $900. So his taxable income in this situation is $1,700. $800 plus $900. And then we would just take the 6.2%, 105.40. 1,700 times 1.45% would be $24.65. So again, it's just important to kind of review what taxable income is and what's taxable as far as FICA taxes go. Because I know that gets a little confusing when you're dealing with tax deferred contribution plans like a 401k, because technically when you say tax deferred or pre-taxed contributions, you know, we tend to think that it's not subject to any taxes at all, but that is still part of his gross taxable income under FICA. Okay, now you will not be taxed on that on federal income tax. So those, which we'll learn about more in Chapter 4, those contributions are not federal income taxed. Okay, so that's kind of the difference here. So I just wanted to kind of go over that one because it gets a little confusing. Okay, well, we are on to our last one. And this one, let me just get there. Okay, so this one we're dealing with an individual who has two different jobs. So Ralph Hinwood was paid a salary of $64,600 by Odesto Company, and during that same year, he started his own business as a public accountant and reported a net business income of $70,000 on his income tax return. So here we're looking at, he has a job where he's an employee, and so he's going to be taxed at the general 6.2%, 1.45%. And now we have his self-employment where he is going to be taxed, you know, double those rates. So we just need to make sure and put in the correct tax amounts. So again, you know, the first thing is to calculate what is the actual taxable income in these two situations. So it wants to know the amount of FICA taxes that were withheld from his earnings by Odesto Company. Okay, so we're just looking at Odesto Company first. So in this case, we are going to tax the full 6.2%. And when I calculate that out, that'll be $4,005.20. And then 64,600 times 1.45%. His high taxes are $936.70. So that first one, part A, is very straightforward and simple. And then we get into self-employment taxes. So self-employment taxes, again, are a little trickier because we have two things we need to worry about. Overall, he's paying double, right? So as a self-employed individual, he needs to pay 6.2% employee tax and the 6.2% employer tax. So he's paying 12.4% OASDI and then 2.9% in high taxes. But the only other consideration, that would be pretty straightforward, but the other consideration is the wage limit. So it doesn't matter how many jobs we have, that wage limit still applies to FICA OASDI. So any earnings he makes beyond $128,400 are not taxed by OASDI. So we have to consider what is his taxable income. Well, if I add both of the incomes up together, 64,600 plus 70,000, his total wages this year were $134,600. Well, that exceeds the $128,400. So I would need to calculate how much is taxable. Well, we've already taxed him on the 64,600, so I can take that out, which obviously gets us back to the 70. I'm sorry, I misspoke there. Obviously, that takes us back to the 70,000 and gets us really nowhere. So what I want to do is I want to take the tax limit of $128,400 and subtract out what we've already taxed him on, that first salary, the $64,600. So we know he still is going to owe OASDI taxes on $63,800 wages. So $63,800 of the $70,000 self-employment income is taxable. Okay, the other exceeds the 128,400, which is what, like 6,200. So that 6,200 exceeds the amount that he should be taxed on. So 63,800 is his taxable income for self-employment taxes. So that one gets charged at the 12.4%. So self-employment tax for OASDI is $7,911.20. For Medicare or high, there is no limit. So all 70,000 of his self-employment taxes are taxable at the 2.9% rate. So that would be $2,030. Okay. So again, that one's just a little bit different because he has two sources of income, but we still have to consider on the OASDI the tax limit, the wage limit that he pays taxes on. And then again, the self-employment taxes are double the rates. So hopefully that was pretty helpful to just go through a few of those little examples. I know that doesn't cover every homework problem, but it covers some of the trickier ones and the ones I see students struggle with. So if you've watched this video and then you've done your homework and you have any additional questions, please feel free to email me and we can set up a time to kind of go over it. And I hope the class is going well. Take care.